I don't use that information except for targeting. Targeting. If I can see a diagonal trend line, whether it be viewed as supposed resistance or support, when it's clean like that, when it's obvious, and it's diametrically opposed to what I think the market's most likely going to do next, I'll target those types of things. Otherwise, I'm looking for clean highs and lows, which let's go over now why this was running on the live stream before I started talking. Let me get this little bit of business off here first. All right, so make this a little bit larger in case you guys are like me, visually challenged in your older age. So Asian session buy side liquidity. Okay, and why is it being called that? And why is it important? If you look at all these highs in here, look at the time that high formed. It's 10 o'clock in the evening last night during Sunday's Asian session. Now, that's not the Asian session kill zone. Okay, Asian session kill zone is 7 a.m. to 9 p.m. Eastern time. That's like the sweet spot for trading. It's like a nice little 2-hour window where you can go in here and scalp and get something. There's usually always a first presented fair value gap in that you can use. There's always some old high or old low it can run for. And I'll look at that in a second. But for now, just let me cover the point of why I'm calling it the Asian session buy side liquidity. Asian session ends and closes around 5 a.m. Eastern time. Okay, so that's about right there. Okay, so if this is our delineation for Asian session close, and this is for Forex, for equities, index futures type thing, that's your delineation right there. So what you want to do is visually represent a starting point of that and then go back through Asia session. So 7 o'clock in the PM, 7 p.m. Eastern time. Look for the obvious smooth highs or lows. This was highlighted before the stream began with me talking, so you watch it, you can see it, and that was the draw on liquidity. It's smooth, okay? And this high here, while it did take this short-term high here and rejected that, they left that. That's engineered liquidity. Now, engineered liquidity is where the market will run to an obvious level, okay? And now when I say obvious, that is synonymous with retail, okay? So don't get your panties in a bunch, little boys, okay? Whenever a level on the chart looks like a perfect classic scenario of what every textbook shows as a resistance or a support level, they always show it like this: high, 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 high. They're going to say that's a strong resistance level. Now, while I'll admit at that moment when it starts to drop down, that would be considered a present nice resistance level where price was unable to overcome that. I'm not looking at price when it's creating these types of things here and trying to trade that, because you don't know if they're going to run through that as a new trader or if they're going to continue dropping lower. You don't know that. So that's why I don't teach that way. What I do is I teach you to look for it in the past, because that's the trap. Whenever you're looking for smooth highs like this and it's framed on the basis of time, what does that mean? Well, the first primary function, what we're doing is we're looking for times in the chart where smooth highs and smooth lows or single highs or single lows exist. And I'll tell you what that is by contrast. But for now, just look at this and know that this is too smooth, and smooth areas in price action tend to become or made jagged. And you can see the price was meandering around off of some random box here. I probably just scribbled that on there from just, guesswork. And it rallied all the way up and traded into that smooth area. Look at the reaction it's been since then. I hate when it does. If I go up there too high and it creates that little bump like that. It's a good thing I don't have like a competitor using market profile, right? Because that would be really embarrassing. It would never happen. It's just, the guys, I listen real quick. Let me just toss it in here. Um, if I'm going to talk about any one person, I'm going to call them out by their name. Okay, so when you see these boys out there saying that I'm dissing them, this and that, if I say your name, then I am dissing you. But if I'm dissing what you use, it's a broad paintbrush thing. I'm including all of you. So smooth highs, smooth highs and smooth lows during sessions. So what does that mean? Asia, the entire Asian session. Go through the whole gambit of the time. So that would look like this. All right, so the entirety of that range during Asia or the Asian market. And this helps me because in the book, it makes it a whole lot more dynamic by seeing this. So that way I can refer to on this day, I talked about how we frame very specific sessions. Sessions are not, okay? I see these people doing it all the time. Even brokerage firms are putting it in their information on their website too. ICT kill zones, okay? This is not the kill zone. This is the entirety of the session. So there's a difference. When you look at the entire range that's available, you would include all of this. So that's the Asian session high, and that's the Asian session low. See the difference between that and this? Take away that to the right because that's not, we don't want that. But this is the entirety of the Asian session kill zone. See the difference between that and this vertical line and that vertical line? When you're looking for smooth highs and smooth lows, do not, listen to me, do not limit your perspective to only that of during the kill zones. You're going to find really good setups for that to, act as a draw on liquidity. But what happens if you already went outside that range, as we seen here? If you're only using my kill zone to look for the liquidity runs on relative equal highs or relative equal lows, this has already been used and it's useless to you, right? Because we've already went outside of that. And this is where a lot of questions come to me or confusions or they call it doubts. I have a doubt, sir. They'll put that in the comment section. And what I'm basically saying to you is there's nothing inherently wrong with limiting your search for relative equal highs or lows in that kill zone or any kill zone, like the London kill zone. That would be 2 o'clock in the morning to 4 a.m. That's your sweet spot, but it goes all the way to 5 a.m. Why? Because it's an overlap with Asia's close. Ooh. So you want to have that 3-hour window between 2 a.m. Eastern time to 5 a.m. Whether you're trading Forex, whether you're trading index futures, it's the same. It's the same. So when we're looking at the entirety of the Asian session, session is not kill zone. Okay. If it was just that easy, I never would have said kill zone. Kill zone is a very specific time during the overall broad brush concept of where are we at in the world globally trading right now. Well, at 7 o'clock in the evening Eastern time, Asia's coming on board, and that session usually winds down and closes up shop at 5 a.m. Eastern time. But during that time, you have the European session that's trading, and it usually closes around 10 o'clock, 11 o'clock in the morning Eastern time. So if you're going to be trading PM session, afternoon equities, NQ, ES, the dirty 30, don't don't go hoeing. don't use Dow. Okay, it's unruly. So did he just say hoeing? I'm into farming now. Okay, I'm into farming. So if you're looking for ranges to determine very obvious clean highs and clean lows, okay, if you look at it from a broad brush perspective like that, don't just limit it to the kill zones. Look at the entirety of the range, and you're going to see where's the obvious smooth level. Well, looking back, now that we've differentiated the kill zone here, I'm going to remove that because there's already a whole lot of things on the chart. But can you see how that's obvious? How retail traders would say, look at this. If I was writing a book on support and resistance only, and I wanted to use a classic example of it, this would find its way in that chapter or segment of the book because it's showing clear, obvious hindsight resistance. And that's where the advantage is because retail traders are taught to think that these things repeat. And I guess in a way, sometimes it does. Okay. But I have found in the last 34 years that when it's so obvious and the things that I like to look for are diametrically opposed. So in other words, if I can see a retail concept or some kind of logic that a new startup trader that bought a book would see in price action, and I'm seeing clearly that they're going to run those lows or highs out for the purpose of liquidity, then it's pretty much a 90% likelihood that I'm going to be correct in my expectation, but that last 10% can still get me, which is why we use stop losses. Okay, so real smooth highs versus where's the smooth lows at? This was the low during that Asian session, not kill zone. Okay, so we have this low here, which was going to be what? Think now, kill zone. This is the London open kill zone session low. So that would look like this. Find 2 a.m. Eastern time. Always set your time on your platform to New York local time. I don't care what anybody else tells you. That's what everybody's really watching in the financial industry. So we go to 5 a.m. right there. Okay. So that right there is your London open kill zone, not session. That London session goes till 10 o'clock to 11 o'clock in the morning. Okay. So basically, London close. If you look at all of my stuff on Forex trading, that is your window. That's a little sweet spot. We taught it as initially if you're trading London, the extreme of the range is usually defined by 10 o'clock to 11 o'clock in the morning. So that's profit taking if you're a London session trader or European session trader and you've been trading all night through Globex hours into regular New York session hours. There's usually a strong reason or suggestion to take profits at least around that time. Doesn't mean it can high or create the higher low of the day, but usually there's some kind of a tradable higher low and it's beneficial for profit taking. So inside this blue box here, that is the ICT London Open kill zone, not the session. So when I go through the process, like we just came from a weekend, no trading until Sunday open at 6 p.m. What am I doing? When I first sit down, I'm not drawing out boxes like this and putting vertical lines on. Okay. My chart is completely naked. There's nothing there, which helps me also find the levels that are so perfectly clear. When you have all the lipstick on stuff like this, and I'm keeping these on here because I want to talk about a couple things before we close the session, and then we can go, pay attention on live price action on X. By having your chart naked, you want to have at least one of your workspaces where you keep a blank chart and don't have any annotations on it at all. Because if you put something on the chart, whether it's something that I use and teach or someone else is using, and you're hoping that this is going to give you some setup, what you've done is you've blocked out every potential opportunity. And this is really specifically talking to the newer traders or newer students or someone that isn't well versed in trading or reading price action. If you put an annotation on your chart, a level, okay, you've already committed all of your hopes and dreams and consideration around the idea of I'm not going to do anything until it gets to this level and it does something for me, and then I'm going to react. Okay, right away, you have completely closed your eyes to every potential opportunity that may present itself. And then you may be surprised because your experience level is too small. And I don't mean that to be derogatory, but you don't have enough experience to see when you're wrong because you're subscribing to an idea because you want to see yourself stick to a model. In the beginning, it's going to feel like you're floundering. It's going to feel like you're guessing and nothing seems right. And that's all normal. That's perfectly normal no matter what you're using. It's not limited to just me market activity through the lens that I've presented to you. It's in every discipline of trading. No matter where you start, you're going to flounder in the beginning. You're not going to trust what you're doing. You're not going to know what you're doing. And that's what you have to do it for without expectation in the beginning. So you get a baseline. And every day you learn a little bit more and learn a little bit more. But where do you start from the beginning? Like, where's the beginning basis point? You have to look at time first. Where are you highlighting the bookmarks or you know, escaping me, the, 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 the framework at which you see that would have been a part where I would have hit Control M and then went in and edited it out and then said what I'm about to say here, where you frame the reference of time. And then inside that window frame, which we have here delineated for Asia, vertical line here and here. And then for London, this is your beginning point for the close of Asia and lunch for London. And we'll do 11 a.m. There you go. So beginning 2 a.m. And this is what you would be using reference for the PM session. Every single day, if I'm looking at PM session trading, if I want to consider PM session trading, this is the first frame of reference I'm looking at because I want a broad brush perspective. My chart would kind of be focused like that. That would be the reference in time where the highs and the lows, or wherever relatively smooth highs or relative equal lows would be. Inside of the range here, let's just assume for a moment that it's 9:30 p.m. Eastern time, which it's clearly not. It's 8:25 a.m. Eastern time, Monday morning, January 12th, 2026. If it were 1:30 p.m. today, this is the range in which I would look back through it and say, okay, where did they leave smooth highs and smooth lows? I'm not just simply looking at the highest high. I'm assuming, for the sake of example, let's assume that this was the highest it goes between, you know, 2 o'clock in the morning to 11 o'clock in the morning today. We still have some time to make that higher high here if it wants to. I'm just saying, by example, let's assume for a moment that this is the highest high it forms and this is the lowest low it forms. What I would look for is inside that range, relative to that time, the time aspect has been utilized already because this high is higher than the highest high prior to it forming is here. So between this vertical line at 2 a.m. and this vertical line at 11 a.m., I'm looking for the highest high and the lowest low, and inside that range, because the time aspect is now complete. Now I'm looking for the price aspect. So it's first time, then it's price. So now what am I looking for? I'm looking for smooth lows because everything it's been pushed up to the high end. So we're in a premium market. So the first thing I want to do is say, okay, if it's going to go higher, now listen, folks, this, whether you like me or not, I don't care. Okay. Whether you like my concepts or believe in them, I don't care. This is going to help you in your own discipline. If you're someone else that's trading something else, if if you start a session and it's been moving one-sided, whether this market continues going higher or if it reverses and goes lower, it's still optimal to look for something that creates a relative equal low in all that price action. Because, for the sake of argument, let's assume that the market's going to continue going higher. It's more likely for the market to drop down and disrupt the existing market run, knock out weak bulls. And how would they do that? They would target a low, relative equal lows. Then once it goes down there, it could resume going higher. Or you could just use that as the basis for that's what you want to be short on, and that you don't care if it continues going lower and you don't care if it reverses. That's the mindset I cultivate with new students. You're not trying to ride the entirety of the move. You're not trying to be right. You're looking for the easiest low hanging fruit objective. What is it likely to do next? You're not reacting to anything, you're predicting. That's what you're doing when you win. When you win a winning trade and you profit, what's the first thing came to your mind? You did something right. That's what you're saying. And when you take it to the social media, what are you hoping that people say? Wow, that was awesome. You're the GOAT. You did that right. You see what I'm saying? So when you hear people, and a lot of these are mentors, quote unquote, they'll say, I am me. I'm trying to teach you to be right. No, that's a default of you doing the right thing, following a process that has a baseline that's statistically probable to continue in the future. Nothing is perfect. This is a statistical probability in your favor if you do these types of things, looking back through time, looking for smooth highs and smooth lows, and then limiting your focus to just simply looking for a setup that would yield a run into that. Now let's go back. I'm going to take these lines off because I've said enough about the time part of it. And this is the London open kill zone. So we have the high here and the low here. After 5 a.m. and we entered 7 a.m. And this is when you want to start expecting pre-market session trading. You can do all of your setups between 7 o'clock in the morning and 9 o'clock in the morning and never, ever, ever, ever engage the 9:30 opening or opening range. People are afraid to trade it because they don't know what they're doing. And that's what I'm teaching you today. I'm teaching you how to work within it, look for ranges to run for liquidity, because that's what this is doing between 7 o'clock in the morning and 9 o'clock in the morning every single trading day. Every single trading day. I don't care if it's a day right after a holiday. I don't care if it's a partial day where it's a holiday session where we close early in the afternoon. It's going to do this every single day, flawlessly, without fail. It's going to do it. You can set your watch to it. It's going to do it every single day. You don't need anything except for understanding what I'm about to say here. And you can encapsulate everything you would ever hope for if you have the time to be in front of the charts and look for it. Blue box is the London session opening kill zone. It's very specific because it's 2 a.m. start time and 5 a.m. close. 4 a.m. is the sweet spot. Okay, that's where your purest little runs that start or begin for the setup inside of the London. So if you're a London trader, if you're up at that time, okay, it doesn't mean you have to be living there geocentric, but it means that if you're focusing on that time of day, you look at 2 o'clock to 4 o'clock in the morning. And after 4 o'clock in the morning, unless it creates some kind of parabolic run to a higher time frame PD array, as you see it does down here, that green box is that daily suspension block high. And I'll draw out to a daily chart and show you where this all fits and all that. But you can see it drops pretty aggressively down into that, and it does form the low at 343, which is probably convenient because it fits inside the time window I'm telling you that these things form. But that low reacts off of some random goofball of a range that I put on the chart, 2 weeks ago and showed you, look at this, pay attention to this. And it's an old level. It's a stale level. And it's not a classic support and resistance level, boys. It's the top of a volume imbalance that's part of a buy side imbalance, sell side inefficiency, which is not a liquidity void. Okay. So that reaction there, if it's running here and we close up shop kill zone wise, there's a gap of dead time. What does that mean? We're not doing anything from this point here to that. All of this information here, while somewhat useful, I'm not trying to engage in that. Now, when I was working with Forex, I would sometimes enter in because if I had a really strong opinion, if I had real strong convictions about what I believe the market was going to be doing, then sometimes I would enter into that. And then, no doubt, some people would say, you're trading outside the kill zone, which I felt was fun. It was entertaining for me to do that. But as the creator of this stuff, I have the privilege to be able to do that kind of thing. So if you're listening to me to learn, avoid this area because it will keep you out of troubled waters. Okay, it won't bog you down in the molasses. Okay, you won't be trying to run in a swamp. Wait until 7 o'clock in the morning. Then the price action cleans up. It gets real nice. So